If you've ever stood at the checkout and wondered, should I swipe my debit card or my credit card? You're not alone. It seems like such a simple choice, but that one decision can actually have a big impact on your finances, credit score, and even how protected your money is. Today, we're breaking down the real differences between debit and credit cards. And by the end of this video, you'll know exactly which one is better for you. Welcome back to RichMap, where we help you make smarter financial moves, save more, and grow your wealth. If you're new here, don't forget to hit that subscribe button and tap the bell so you never miss out on our weekly money tips. Now, let's dive into the battle of debit versus credit cards and figure out which one truly deserves a place in your wallet. Alright, let's start simple. Both debit and credit cards look almost identical. They have your name, card number, and chip, but they work in completely different ways. When you use a debit card, the money comes directly out of your bank account. Think of it as digital cash. Once it's spent, it's gone. On the other hand, credit card lets you borrow money from the bank, up to a certain limit, and you'll pay it back later, ideally in full, to avoid interest. That difference right there changes everything about how they affect your financial life. Let's start with the pros of debit cards. Debit cards are great for controlling spending. You can't spend more than what's in your account, which helps prevent debt. They're also ideal for everyday expenses, like groceries, gas, or small purchases. Things you'd normally pay cash for. There's no bill to pay later, no interest rates, and no risk of falling into credit card debt. They also make managing your budget easier. When you swipe, you see the money leave your account instantly, which helps you stay aware of your spending. Plus, for people who've had trouble managing credit in the past or are just starting out, debit cards are safe and straightforward. But debit cards also have some serious downsides. The biggest one is limited protection. If someone steals your debit card and drains your account, that's your real money gone, not the bank's. Yes, your bank might refund it, but it could take days or weeks while they investigate. In the meantime, your bills might bounce, and your account could be frozen. Another issue: debit cards don't help you build credit history. Every swipe you make doesn't get reported to the credit bureaus, which means no credit score improvement. So if your goal is to buy a car, rent an apartment, or get a mortgage later, using only a debit card won't help you build the credit profile you'll need. Now, let's flip the coin and talk about credit cards. Credit cards are like a financial tool, and when used right, they can open doors. The biggest advantage is building your credit score. Every on-time payment you make strengthens your credit history and shows lenders that you're responsible. A good credit score means better loan rates, easier approvals, and access to premium cards with more rewards. Speaking of rewards, this is where credit cards shine. Many offer cashback, travel miles, or points for every dollar you spend. Over time, those perks can add up to hundreds or even thousands of dollars in free value. You can literally get paid for using your card, as long as you pay your balance in full each month. Credit cards also provide superior protection. If your card gets stolen or a merchant overcharges you, you can dispute the transaction before paying. It's the bank's money at risk, not yours. Most major cards also include extra benefits like purchase protection, extended warranties, and even travel insurance. Perks that debit cards usually don't offer. But of course, credit cards can be dangerous if misused. The biggest trap is debt. If you don't pay your balance in full each month, interest rates can climb above 20%, and that's when things spiral. Carrying balances also hurts your credit utilization ratio, which can drop your credit score. So, the key with credit cards is discipline. Treat it like cash you'll repay immediately, not as free money. Now comes the big question: which one is better? Debit or credit? The truth is, it depends on your habits and financial goals. If you struggle with overspending or you're trying to stay debt-free, debit cards are your best friend. They keep things simple and safe. What you have is what you spend. But if you're financially disciplined, pay your bills on time, and want to build credit or earn rewards, credit cards are the smarter choice. They offer more protection, more perks, and more long-term benefits. Many smart consumers actually use both strategically. They use credit cards for online shopping, travel, and big purchases to take advantage of rewards and protection, and debit cards for day-to-day expenses, like food or small payments, where they want to keep spending in check. It is not really about choosing one over the other. It is about knowing when to use each. Think of your debit card as your cash card and your credit card as your power tool for building credit and getting perks. Together, they make your financial life stronger and more flexible. So there you have it. Debit cards keep you grounded. Credit cards help you grow. The best choice isn't one or the other. It's how you use them. The key is to control your cards instead of letting them control you. If this video helped clear up the debit versus credit confusion, make sure to give it a thumbs up and let me know in the comments. Are you team debit or team credit? I'd love to hear your thoughts. And if you're serious about mastering your finances, subscribe to RichMap for weekly videos on credit, investing, and smart money moves that actually work. Until next time, keep learning, keep saving, and keep mapping your way to financial freedom.